On February 12th, after several rounds of deliberations, the Karnataka government promulgated an ordinance to crack the whip on unlicensed and unregistered microfinance institutions and money lending agencies in the state. The new legislation aims to protect economically vulnerable groups and individuals from exorbitant interest rates and coercive means of loan recovery. But why did such an ordinance become necessary in the first place? What are its key features? And what are some of the concerns raised by microfinance institutions? Namaskara, welcome to Decode Karnataka. I'm Nalme Nachiyar. Farmers and agricultural laborers ending their lives. Poor people hounded by financial agents. Families intimidated and evicted from their homes or fleeing their villages in fear. Karnataka saw a spate of such incidents being reported of late. Illegal and unregistered microfinance companies were accused of overlending and trapping borrowers in an endless cycle of debt, of levying exorbitant interest rates ranging anywhere between 21% and 29%, and outsourcing loan recovery to criminals. This widespread harassment of small borrowers led to public outrage, forcing the Siddaramaiah-led government to promulgate the Karnataka Microloans and Small Loans Prevention of Coercive Action Ordinance 2025. Now, the legislation, among a host of other measures, mandates the registration of all existing and new microfinance institutions, money lending organizations, and private lenders. It specifically exempts banks and non-banking financial companies registered under the RBI from its ambit. Borrowers from vulnerable sections of the society are discharged from repaying loans taken from unregistered lenders. MFI should issue loan cards with complete details to borrowers. All communications, including loan cards to the borrower, should be in Kannada. Rate of interest charged by MFIs should be displayed at all its offices. No police officer shall refuse to register a case for violation of norms. Non-compliance could earn a fine of 5 lakh and up to 10-year imprisonment. However, reservations abound. Is the ordinance enough to tackle the menace of unregistered lenders? We discussed this week with Senior Deputy Editor Sharath Srivatsa. Hi, sir.
Hi.
Microfinance institutions, the concept of small loans, especially in rural areas, is not new. So, why have we seen this sudden increase in cases of forceful loan recovery that has made this particular ordinance that we are speaking about today so necessary?
So, what we get to understand is, this is a kind of a national phenomena. This has been kind of reported in other states like Punjab too earlier last year. And in Karnataka, this got started reporting since September, late August and September, and became really big after a couple of suicides.
2024.
A couple of suicides were reported. And it soon spread the loan recovery, the coercion during loan recovery, and women abandoning their villages, fearing recovery agents. It made headlines, and that is when the government stepped in. And we were given to understand through the microfinance companies that a large number of these women who defaulted on loans were also those who had taken multiple loans.
Okay.
In the last few years, the RBI,
from the same lender or multiple different lenders?
In some cases, multiple lenders. In most cases, it was the same lender who had topped up their loans.
Okay.
So, in the last couple of years, RBI also changed policies, and one was it removed the cap on the rate of interest.
Okay.
That was one thing. The second one was, it introduced a policy that enabled the microfinance companies to club a couple of loans. One was microfinance loan that was without any collateral, and then there was something called as micro lap. It was in their parlance, it was 2+1 loans.
Okay.
Micro lap is micro loan against property.
Okay.
So this is what happened to a couple of businesses. They took loans against their properties, like small homes in rural areas or their businesses. And what had happened was the banks were leveraging more than what was expected.
Okay.
And they had not considered the repayment capacity of the borrower. So, and many of the borrowers had availed multiple loans to service the previous loans. So and it came to a situation where defaults increased in the last 6 months to 8 months.
Okay.
And the recovery process started. And according to the microfinance companies, they said, though they were, many of the cases were referred to the judicial process for recovery, the borrowers did not come. I mean, they did not receive their notices.
Okay.
And they did not appear in the recovery process, where a resettlement of a renegotiated amount could have been paid.
Okay.
And that is when the recovery agents stepped in. So so during those recovery, they seem to have violated a lot of RBI norms, which forced them not to go before 10 o'clock or after 6, and not use abusive words, not stigmatize them or insult them in front of their kith and kin.
Okay.
So most of those things have happened.
Okay. So now this ordinance that has been promulgated to deal with this mess that we are seeing has suggested a host of measures to rein in specifically unregistered, unlicensed, or illegal microfinance institutions or private lenders. And there are some measures, of course, that seek to provide relief to borrowers. Do you think this legislation that it will come to be is strong enough to reset this chaos that we are witnessing at this point?
So those who have already studied the legislation and those who are the stakeholders in the microfinance industry believe the other way around. They think that it's not going to help. So basically, this law has kept out the registered NBFCs and the banks and the microfinance institutions that are registered with the RBI. So leaving those unregistered money lenders, unlicensed money lenders to be brought under the purview of this act. According to the government, a ballpark figure of 60,000 crore is what has been lent by the RBI registered organizations, and about 40,000 crores has been lent by the institutions that are not registered with RBI.
In the last year,
so far it's the ticket size. So what will now come under this ordinance are those cooperative societies, the trusts, the NGOs that are into microfinance, and these are the agencies that are not registered under the RBI. RBI guidelines. So which means to say you have removed a large part of microfinance institutions from the purview of the act, leaving a small portion under the act. That is one. Two is the borrowers are basically coming from the vulnerable sections, and it is to be seen whether these vulnerable section would rise up and go and complain to the police about a harassment by a money lender. Or even in many cases in rural areas, money lenders are mostly associated, they are politically active. Will the local administration be able to handle them when they are politically active is also a question that are being raised.
When you say local administration, because I think in the ordinance the registering authority is the deputy commissioner.
Yeah.
Okay, so you say they may not be able to.
Yeah, because of the political clout that they may wield, it may become difficult for the administration to handle.
Okay. But do you see any positive in this ordinance? Any positive?
Yes, a couple of provisions will say that the loan against sureties. So those will become null and void moment this. I mean, the sureties that have been taken by those who are not registered with the RBI. So those kind of loans, they are supposed to return the surety, whether it can be pawned jewelry or a property document that has been pawned. So that's one of the biggest things that can happen, provided the borrowers come forward to register a complaint that they have taken a loan and they are being harassed. So that's the bigger question, because socially they are vulnerable, and if because they go to these microfinance institutions or a local money lender, because the institutional finance, they cannot access the institutional finance mechanisms like through nationalized banks.
Okay.
And they are vulnerable because they may get into the same trap again
Hmm.
In an emergency, they may require money.
In the run up to this ordinance, a few days before that, the state government had said they will set up helplines also where people can call in and report a violation. I don't think it's been set up.
No, it will be set up. Everything will be set up. But the point is, will the borrower who's being harassed locally, will he complain? Is the question.
But if it is made anonymous, do you think it will?
It might help, but it also becomes difficult for the government to take action. But
Okay.
there's one provision in this act that police can also take a sumo action against the erring money lender.
Correct. Yeah. Okay. So that is
Yeah.
one feature we could
Yeah.
bank on. Okay. This ordinance is sort of a concerted step to ease the distress of borrowers, like you said. But have there been any concerns that have been raised by micro lenders so far regarding the provisions, any of the provisions in the ordinance?
See, the institutional lenders in the microfinance, I don't think they are pretty much bothered about this ordinance, because they don't come under the provisions of this ordinance. Those who are coming under this ordinance are mostly unregulated. I mean, not institutional,
Right.
except for the cooperative societies, trusts, or the NGOs that are into lending. Microfinance representatives did meet the chief minister, and later they had multiple meetings with the government, and they are also not forthcoming about their concerns publicly.
Okay.
But what we hear is that they are likely to change relook into their credit policy sometime next financial year. Until the end of this financial year, their lending might slow down. That is what we hear informally from the representatives of the microfinance companies.
All right.
So one of the experts was telling me that this ordinance should have been done 40 years ago, not now, because 40 years ago the money lending in rural areas was different, and now the face of money lending has changed from a typical rural money lender to an institutional money lending through microfinance companies.
Okay.
So he believed that this is not going to help much.
Okay. Okay. And what more should be done? Is there a framework for that?
See, the RBI couple of years back removed the cap on the rate of interest.
Yeah.
So one is the rate of interest should be regulated. If you're trying to regulate money lending, is what they believe. And the onus on restricting the loan portfolio to a particular individual should also be restrained by the microfinance company. Depending on the depending on what is the repayment capacity.
Okay.
So money has been lent beyond the repayment capacity. If somebody has had the capacity to repay 1 lakh loan, so that person has been topped up to a 3 lakh loan because he was paying 1 lakh loan on time. So now you allowed him to take more, and there is also an aspirational part of the borrower. So there is rural distress, there is income, incomes have stagnated post COVID, inflation has gone up, so there are places in income has declined, and top of it they have aspirations too. And offering a unsecured loan is like allowing him to take more, and you're topping up with more and more loans beyond his capacities.
Yeah. The ordinance, while a temporary intervention, may not have the desired effect as envisaged by the state government unless there is a robust mechanism to implement it. What shape will the ordinance assume in the upcoming budget session? We will know in 2 weeks. I'll see you in the next episode of Decode Karnataka. Until then, follow The Hindu for more such stories and videos.